Thanks, Darcy, and welcome everyone to the call today. It's a really pivotal day for us in terms of SRG Global's journey, very much a transformational day for us as a business. Quite a bit to get through today, so I'll really touch on the key themes of the business and the go forward. But before I do that, I'd really like to acknowledge our people. There will be a lot of SRG Global people on this call. They've done a terrific job, and not only in the last 12 months, but in the last 4 to 5 years of really transforming this business and really living and breathing what we stand for: live for the challenge, smart together, never give up, and have each other's backs. And I really want to acknowledge the great work they've done, and I'm proud to be a part of the team. As I mentioned, there's a lot to get through today, so we'll really stick to key themes. If we move to slide 2, which is the executive summary, and really what you're seeing here is just evidence, evidence of the delivery of the business. So I'll focus on FY24 first, then we'll talk about the acquisition and the way forward, and we'll stick to the key themes. And I think from an FY24 perspective, it's a record result. 98.5 million EBITDA, up 23%, EBIT up 31% to 65.6 million. A terrific result and a continuation of the growth of the business. Continued strong returns to shareholders. EPS up 15%. Second half dividend of 2.5 cents a share, taking the full year dividend to 4.5 cents, which is 13% up on last year. It's showing off dividend yield fully franked to 6% plus, which really, and we've done a great job, I think, in terms of balancing both the growth and the yield dividend for shareholders. Excellent cash generation, continues our strong track record of cash generation, which really underpins the business. Terrific result, moving from net debt of 17 to net cash of 17.8. It's off the back of 117% EBITDA to cash conversion, and a really, really strong result. We'll go into the detail of the 24 results, but I think overarching, a terrific result and a record result for SRG Global in our history. In terms of the way forward, today we're really pleased to announce the transformational acquisition of Diona. They're a market leader in water security, energy transition, very transformative deal for us, and I'll talk through the detail of that. It's circa 10% EPS accretive. It continues on the way forward of our track record of winning and executing work. We now have 3 billion work in hand. We've transitioned the profile of the business to 80% annuity recurring earnings, and really gives us a terrific platform and visibility into the future on how we will grow the business. We've increased guidance for FY25 to circa 125 million. That includes a 10-month contribution from Diona, and in the footnote there, it really breaks that down and assumes an 11% growth rate for the SRG Global core business, plus a 16 million EBITDA contribution from Diona, which is for a 10-month contribution from them. So it really provides, I guess, some certainty and scale and size of the business that we are today and the business that we are moving forward. So getting into the FY24 results, so slide 3, always, we've got a great video on our website which talks about the different offices and locations on which we work. This is the West Wind Farm with Meridian Energy in Wellington. It's probably one of the nicest offices that we have in the business, although I'm sure our people at Jervis Bay doing the bridge construction job would probably argue with that, but we're really proud on the locations that we work within. By going to sort of the numbers on slide 4, as I mentioned, it's a record financial result. Revenue up, EBITDA up, EBIT up, profit up. Really strong margin performance for those who have followed us for a while. I was guiding the market to a 9% EBITDA margin performance this year. We had some contingencies tipped out at the back end of 23, which was, took that to a little bit higher. But, really pleasingly for me, you can kind of see the flow through from EBIT and NPAT in terms of the margin flow through, which is really, I guess, us starting to realise some of the benefits, becoming a much more capital light business as an overall group. I mentioned earlier, dividends per share up 13%. Earnings per share up 15%. And look, for me, an absolute highlight is the net cash position we've got to today. But look, I think the numbers tell just part of the story. It's the quality that sits behind the numbers and the quality of the business that we are today. And I really link that back to strategy. We've had a very clear strategy for a long period of time, and we're really doing everything that we said we were going to do and executing what's been a very, very clear strategy for the business. I'll move into slide 5. That really gives you some of, I guess, the key financial highlights over a bit of a trend. You can see the really positive track record of delivery and the sort of trend around EBITDA, EPS, dividend, along with the terrific growth in EBITDA and cash conversion. Probably for the more detail-minded on slide 6, it really sort of goes into some of the more key financial metrics. And look, I think there's not a metric on this page that we have not absolutely met and exceeded. And I think if there's one slide to take away from this entire deck, it's this slide, which really highlights the long-term track record of delivery for this business. But it also goes to the quality of the business that we are today. We're delivering on every metric. I think the 80% annuity recurring earnings is a key highlight for us. And I think this is absolute evidence of the transformation of the company, but in some ways doesn't do justice to the quality of the earnings that sit behind that and the quality of the business that we have today. I'll move to slide 7, really in a bit more detail around the positive cash generation of the business, EBITDA to cash conversion of 117%. We've moved from net debt to net cash, really good free cash flow. It really continues our strong record of cash generation in the business, and which really is a good underpinning of the growth of the company. We've got a really robust financial position from a balance sheet perspective. We're well funded for growth, good liquidity, has given us the ability to do what we've done today, but also maintain a really strong balance sheet and flexibility as we move into the future. There is more details in the appendix on the FY24 financials at the back of the presentation. So, given how much we have to go through today, I'd encourage you to look at those post this call. I think overarching, if we move to slide 9, it's underpinned by a very strong foundation. Running a public company at times, probably in the early days, I used to get worried a bit in terms of everyone seeing our strategy and they're seeing our performance. But really, it's not the best widget or the smartest strategy that's driving our performance. It's our people and our culture, and that's really driving what we're doing today and living and breathing what we stand for. Live for the challenge, smart together, never give up, and have each other's back. So I break down ESG in a bit more detail on slide 10. Look, there's a lot we're doing in the space, and really what we've tried to do here is to give some of the examples of that. Firstly, from an environmental perspective, we've implemented Sustain Life software platform to track our emissions. We've got different initiatives such as green concrete, local tree planting initiatives, solar-powered facilities. And really for us, it's about being real and making a difference. It's about having, working with our clients, smarter designs, different innovative ways of doing things to really drive the sustainability of the planet that we live on. From a social perspective, the Bugarrba Aboriginal joint venture is progressing really well with both FMG and BHP. We're on our 3rd reconciliation action plan, and we're doing a lot of really good work in the social space from a partnership perspective, and the local communities on which we operate. Particularly proud of the work we're doing with Clontarf and Shooting Stars, which is all around driving development opportunities for young Indigenous men and women, and we really want to be a local good community partner into the future. From a governance perspective, it's a continued focus and refinement of our risk management framework. It's a very robust framework. I think it's really, I'd like to call out just the great work we're doing in the psychosocial space. It's not just an issue for industry, it's an issue for society, and there's some really good proactive things that we're doing on that psychosocial perspective. I never like to call out safety. I always call it the glass ball in business that you can never afford to drop. We continue to make great strides from a safety perspective. Our TRIF is at 3, which is the lowest level it's ever been, but every day is a new day, and it's a glass ball that we can never afford to drop. So a pretty quick summary of FY24, but an absolute outstanding result for the business. We're in an exceptionally strong position, gives us a really strong foundation, and has us now well poised to do what we've done today, which is to announce the acquisition of Diona. So before I get into the detail I'm on slide 11 now, before I get into the detail on Diona, there will be a number of Diona people on this call. I'd really like to welcome them to the SRG Global family. We're really excited about the future and you joining us. I will be around the business over the next couple of weeks to meet with you all, and it will be a very exciting future for everyone. If I move to slide 12, which really sort of gives you a bit of an overview of the acquisition. Diona are a leading end-to-end provider in water and energy markets. We've acquired the business through 111 million on a cash-free, debt-free basis. It's an implied EBIT multiple of 6 times FY24 earnings. Very capital-light business, not a lot of DAR in the business, and we've transacted well. From a funding perspective, we are doing an equity raise at 60 million that's fully underwritten. We're doing a 6 million SPP, and the balance will be in cash and debt facilities. I guess what will the business look like as we sit here from a pro forma basis in FY24? Revenues of just under 1.3 billion and EBIT of 84. At circa 10% EPS accretive. It's margin expansionary from an EBIT perspective. It's going to give us terrific cross-selling opportunities, and we're maintaining a very modest gearing ratio of just under 0.3 times net debt to FY24 EBITDA, and I think that's really important measure on FY24 numbers, and for us it's about maintaining a really strong balance sheet and having flexibility to continue to grow into the future. And we plan to conclude the transaction at the start of September. As I sort of mentioned at the start of the call, our FY25 guidance is 125, and that includes a 10-month contribution from Diona. So Diona on slide 13 to give you a bit of an overview of the business. They are a business we have tracked for some time, and look, in many respects, they've undergone a similar transformation to ourselves in terms of the commercial model and really how they've grown their business. They've been around since 1980, a family-owned business, a leading end-to-end partner in design, engineering and project execution. It's all through long-term program and asset management agreements, and it's with full self-perform capability, which very much aligns to the SRG global model, where we basically self-perform everything that we do. They play in two key end markets, water security and energy transition. Clearly markets that have got significant tailwinds in front of them. They've got really broad geographic reach. 100% of their work is East Coast, but pretty evenly split between Queensland, New South Wales, Victoria, and SA. A very client-focused, collaborative approach with long-term partnerships with leading utilities and government agencies. Nearly all their work is with government and utility agency providers. A lot of common and very complementary clients, a lot of common clients to SRG Global that we know today, but some also very complementary ones. Comes with a skilled workforce with a lot of engineering expertise, long-term track record of delivery, and it comes with $1 billion work in hand. And when you think about a business that's turning over just over 200 million, that highlights the visibility of work into the future that's secured. We sort of delve into why have we done this. We're a very natural owner for SRG Global as we move through to slide 14. From a strategic rationale perspective, it really strengthens our position in water security and energy transition. They're a leading provider, for 40 years of history, very embedded with utility and government agencies and playing in two key attractive markets of water security and energy transition. It's very complementary capability to SRG Global. It really adds that whole full service program and asset management service, and will unlock a lot of revenue synergies in terms of the cross-selling opportunity, which is a very strong part of the SRG Global culture. Comes with a high quality management team, well led by Tom Melvin and Lincoln Ma and the team. Everyone will transition with the business. This is not a cost synergy play. It's all about revenue synergy and growth moving into the future. Really enhances our annuity recurring profile. It moves us to that 80-20 split, which has been our long-term strategic aim, very much in line with our strategy. Comes with $1 billion work in hand. A really strong pipeline of more than 2 billion, which, if I'm honest with you, is probably undercooked in terms of the real size of the opportunity. Provides significant cross-selling opportunities and is a financially attractive acquisition, circa 10% EPS accretive, pre any synergies or cross-selling opportunities. Very capital light business with CapEx less than 1% of revenue, and really complements our capability in some very attractive sectors of both water and energy transition. As we move to slide 15, it really highlights probably, I think, a fairly simple schematic, the core capability of Diona. It's a full service program management business. From a water perspective, you can see that kind of full service across the different types of structure and infrastructure in the water space. And then from an energy transition perspective, you can kind of see both from an electrical and gas perspective, and a lot of this is in-ground services and substation work. And in some ways, think of them as a connector style business, and it's a full suite of services. And look, in reality, SRG do a lot in both these sectors as well. And I think the key thing here is these are critical services for our clients. This is not about watering the garden, doing the landscaping, doing the laundry or catering. These are critical services to clients, which makes both Diona and us critical to them. If I move to slide 16, it really highlights two things. One, the absolute unparalleled end-to-end self-perform capability is quite unique compared to a number of competitors they play against. You can see the sort of level of detail and the collaborative nature and the deeply embedded nature that goes with that in terms of early engagement advisory work, community engagement, design and engineering, program management, delivery and asset maintenance work in the entire asset life cycle. It's deeply embedded. More than 96% of our work is with utility and government agency providers, and these are full program asset management agreements. This gives you a little bit of a split about the makeup of that. 84% of it's cost plus or schedule of rates, some certain fixed price elements, but you can see it's a really, really robust commercial model and a low risk commercial model. I talked about being deeply embedded with clients, and if we move to slide 17, I think it really highlights just the low risk collaborative nature of the business. You can kind of see it's all under long-term agreements. You can sort of get a sense of the tenure that some of our key clients we have. And probably the really obvious opportunity here is they've got a very strong East Coast presence. Now, clearly SRG Global has a broader footprint, particularly opportunities in the West and New Zealand as well, which will open up opportunities both ways, certainly from a geographic perspective for Diona, but also I think some of the complementary clients that Diona has today. And I think with the tenure and visibility and collaborative nature of the work we do with our clients, it puts us in an exceptionally strong position. So we move to slide 18, we'll really probably touch on some of the key end markets. Clearly these are, when we're talking about water security and energy transition, these are key growth markets. They are growth markets that we play in today. There's quite a bit of detail here, so look, I'll try and bring it to life. SA Water is a really good example. We have an 8-year contract out to 2029, which is upgrading and renewal of their water mains, treatment plants, storage tanks and facilities. In the gas space, APA, an 8-year contract to upgrade and renew gas mains as part of the National Mains Replacement Program. In the sort of energy space, Ausgrid, which is a relationship that Diona's held since 2006, term contracts all around upgrading the network assets. So clearly well embedded with clients on what are two very, very pivotal end markets for Diona. The next 4 or 5 slides are very much on a market overview. You will have seen that in many different forms. So I think the key takeaways we move to slide 19 is growth, tailwinds and spend. And they're the key 3 messages of these 4 or 5 slides. I'm not going to go into the detail, but clearly there's significant in spend in both water infrastructure and energy infrastructure as we move into the future. If we sort of delve down into a little bit more detail, moving to slide 20, you can kind of see from a water infrastructure perspective, some of the macro drivers of that, population growth, climate change, urbanisation, ageing assets, technological advancements. You can kind of see the growth trend in terms of spend. And there's some very public market information from key clients. Sydney Water are planning to spend $34 billion over the next 10 years, $9 billion over the next 3, and it really gives you an example of the sort of spend coming up in that particular sector. And really one of the things driving that as we move to slide 21, climate change is having quite an impact. Diona's got a very strong rural presence, so nearly 2/3 of their business is rurally based. And extreme weather events are certainly placing pressure on these assets and really provides opportunity for Diona to provide their full program management and maintenance skills. We move into sort of the energy space on slide 22. Look, I think the key messages here, there's obviously an absolute push to renewables, energy security, and modernising existing networks. You can kind of see the spend that's coming up. Multi-net gas is a good example, $670 million up to 2028. Ausgrid, $3.3 billion up to 2029. It really shows you that growth trend over the next 4 to 5 years. But as we move to slide 23, this is not a 3 to 5 year growth horizon. This is a 20 to 30 to 40 year spend and growth in front of us. Significant tailwinds provides a significant opportunity into very, very attractive sectors that we know and know well today, and it provides further opportunity for us to take it into the future. I'll touch on some of the key pro forma financials now. We might flick a couple of slides forward to slide 25. You can see our pro forma revenue and EBITDA there. Revenue just under 3 billion, 118 million EBITDA. And I think just gives you a sense of the scale of the group that we are today. We've obviously called out 125 million for FY25 in terms of guidance from an EBITDA perspective. That includes 10 months contribution for Diona, not the full 12. If we delve into some of the more detailed financial metrics, you can clearly see from an EBIT perspective, being a very capital light business on slide 26, you can see EBIT's moved from 65.6 to 84 on a pro forma basis at a 28% uplift. It's expansionary from an EBIT margin perspective. As SRG Global as a group, it does punch above its weight in terms of margins that we historically get as a group, and this only improves that situation. EPS accretive of circa 10%, and maintaining very modest levels of debt with gearing, net debt to EBITDA just under 0.3 times, and these are FY24 numbers. And look, it's all for us around continuing to maintain a very strong balance sheet into the future. So we move to sort of slide 27, which gives you a little bit of a feel of the business mix. It's a very attractive business mix. Probably a couple of key things I'll call out is the 80-20 annuity recurring earnings mix that you can see there in the middle row. And I think from a geographic perspective as well, in terms of the business that we are today now as a combined group, with 50% of revenue on the East Coast, 5% in New Zealand, and 45% West, really well spread. And I think you'll see that in a further slide in the deck, just the really geographic footprint and opportunity that comes with that. That's a bit about Diona. Really excited about that. I think our ultimate focus in the first 3 to 6 months will be all around cultural integration and really sort of getting the business to operate. It's a really good performing business today, and it'll be about bringing it into the family. In reality, Diona talk out language. It'll be very common language between our two businesses, and I'm really excited about the future of that business. If we kind of move gears now to a bit more of the way forward as a company and what we are today, as we move to slide 29, this is us today, a diversified infrastructure services business. And what we do is bring an engineering mindset to deliver critical services across the entire asset life cycle. I think the key here to really remind everyone on this call, it's the critical services that we provide. They're critical to our clients, which makes us critical to them. Now, what we want to be, our vision's the most sought after in what we do. Others might say number one, market leader. For us, when clients have a challenge, a problem, an opportunity, the first people I want them to think of when they pick up the phone is SRG Global and us making it complex simple for them. From a profile perspective of the group now, I think you can get a really good sense now on slide 30 of the scale of the business. More than 4,000 people, revenues pro forma of circa 1.3 billion. You can sort of see the geographic split, an 80-20 mix from annuity earnings perspective. You can kind of see the geographical reach that we now have as a business. Moving to slide 31, we will report on 2 operating segments moving forward: maintenance, industrial services, and engineering and construction. That's really to align the profile to the business that we are today, and there's some more detail on that in the appendices. So delving into some of the key services that we have today on slide 32, you can kind of see the core services that we provide. We're a very diverse service offering. I think a couple of the key takeaways here is just the quality of the clients that we have today, and that's the diversity of the services and the sectors on which we play. Moving to slide 33, which is our engineering construction business, you can kind of see the core services that we provide. They are very specialist in nature. Again, the quality of the clients that we have in this space. And the lion's share of this work is very much in an ECI long-term partnership arrangement. They're almost like informal collaborative agreements as well, which gives us really long-term visibility in the engineering construction side of the group. Slide 34, which is our strategy. I almost feel boring putting up this slide in terms of we've had a very clear strategy for a long period of time. We're continuing to deliver against that strategy, and with the Diona acquisition, that takes us to that 80-20 split from an earnings perspective, which has been a key objective of ours from a strategic perspective. And for us, it's just going to be continuing to delivering against what's been a very, very clear strategy for a long period of time. And I think slide 35 really highlights the terrific platform that we have today. 3 billion work in hand, 8.5 billion pipeline, which is probably undercooked in terms of the real size, gives us a terrific platform to really leverage the footprint that we have today. And I think that's really driving what is significant momentum in SRG Global as we move to slide 36. We've increased guidance to 125 million. You can see the strong growth trajectory from an organic perspective overlaid with the Diona acquisition, 3 billion work in hand, really positive exposure to great sectors in water, defence, resources, transport and energy. That earnings profile of 80% annuity and in reality, the transformation to diversifying infrastructure services will continue to deliver results. And for us now, it's head down, bum up, and it's continuing to keep doing what we said we would do. And I think that's really the investment proposition of SRG Global when we move to slide 36. It's end-to-end asset life cycle capability where we self-perform everything that we do. We play in very diverse sectors and geographies, and I always say that gives us a natural hedge that we're not weighted to any one client, one sector, one geography, but gives us a very broad platform on which to apply our skills. We're a highly scalable business and business model with experience, systems and structure to be a bigger business than we are today, and we continue to show that through the execution of the company. A high level of annuity earnings profile, which gives a lot of visibility and predictability to the future infrastructure earnings of the group. A very capital light investment profile with CapEx circa 2% of revenue, a really good high yield dividend stock. And I think that's something that we've done really well over the journey, is balancing that growth and dividend elements of the business. It's a really pivotal day in our journey today. I'd really like to thank shareholders for all the support that they've given through this journey. We feel like we're only getting started on where we can go. And I'd once again like to really welcome the Diona people and really thank all SRG Global people for their great efforts in the last 12 months. We've got a terrific platform. It's about staying disciplined and focused, and we'll keep doing what we said we were going to do and building a company that I know we can be. There's a bit of detail post that in terms of the equity raising. I won't sort of go into any of that detail on this call. That'll be for people to read post this call. So perhaps it's an opportunity now to open up for any questions, which Roger you might host.
Okay, thanks, David. There's a few questions that's come through, so we'll just go through it one by one. So a couple of questions here around the EBITDA. So we talk about the EBITDA visibility for FY25 on the guidance of 125 for 25. So what visibility do we have from the EBITDA perspective?
Well, I think if you call it 80-20 as a starting point before we sort of get into the engineering construction side, I think clearly we've got very high levels of visibility in 25. We've come out with a very specific number early for the market, and I think it continues our track record of providing good, clear guidance and delivering against it. So the visibility is high.
Okay, good. One on cash conversion, good cash conversion this year, 117%. How do we think about cash conversion going forward?
I'm not here to sort of provide cash guidance. 117% this year. Clearly there was a bit of flow over from last year into this year. I always said, look, use 80% as a good starting point, and it'll sort of flex a little bit up and down from there. But look at cash generation. Really got to look over the long cycle, and we expect to continue to be really good, strong cash generating business.
Yeah. Okay. Thanks, David. So again on Diona, 19.5 million bucks EBITDA in FY24. How do we think about synergies and the go forward?
Look, it's not a cost synergy play. I mean, a lot of the property, for example, is actually about people working at clients' facilities. Look, from a revenue perspective, clearly we've called out guidance for 25, and look, in reality, we expect to grow that business very, very strongly over the journey, and all things being equal, we should start to see some of that in 25 and really kick in 26, 27, 28, and beyond.
All right, terrific. One around we talk about EBITDA margins as a group between 9 and 10%. How do we think about that in the go forward?
I think obviously Diona very capital light business, and not a lot of data in the business, and I called out in the presentation. It's EBIT margin expansionary. So clearly it's really good EBIT margins are continuing to improve the profile, the overall margins of the group.
All right, terrific. One specific one around lease repayments and where they're shown. So in the cash flow statements, they're shown within the financing activities section, and we do call it out in our cash flow statement in our investor deck of $12.9 million. So that's the number for that. One around Diona looks like an amazing acquisition. What rate do you think this business can grow under SRG's leadership?
Look, I think for us, we've continue to grow the underlying business, the go forward to a circa 10%. And, I think that would be a reasonable profile for Diona as well. I mean, I've in reality called out base case for FY25. And look, I'm a massive believer, bring a business in, integrate it well, get it operating and part of the overall group. And, to me, it's not about the first 3 to 6 months. It's about how we build and grow this business over the long term. But in reality, we're expecting to grow it well into the future.
Right. One around Diona's work in terms of the mix between infrastructure spend from a new build perspective versus existing asset maintenance. And I think it's a good mix between the two.
Yeah, it's a good mix, but probably more towards that asset maintenance elements, all our kind of upgrades, renewals and maintenance work under a program management framework.
I think it's important to emphasise that definitely with our capability, well placed to actually capture the transmission network upgrades that's about to come.
Absolutely. I think if you look at some of the different things that we do, that a relationship with Transparent New Zealand for more than 30 years, and you think about some of the other different businesses we play in, I'm pretty excited that finally I'm going to talk to someone about dam anchoring, and they're going to be as excited as I am. And look, we do a lot in the water energy space, and particularly quite a bit in the maintenance from a renewables perspective. And look, I think there will be more and more opportunities. Asset care is another great business. That when you think about Diona services, a lot of in-ground services, some of the biggest spends are more in that asset monitoring, inspection, testing, advanced non-destructive testing. So there's really good opportunities for the cross-selling of that.
Okay, one around acquisitions. This is just a general question on how do we make sure that this acquisition is a success, I guess?
Well, look, I think it's ultimately down to culture. And, to me, it's all about that's where things succeed or fail. And, Tom and the team, really, really strong leadership team. I think we're a very natural fit for that business. It will create opportunities for people within the Diona group. And, that to me will be my focus.
Yeah, terrific. The next one's around revenue synergy examples. We kind of touched on this.
I think I've probably touched on that enough.
The one around where Diona previously lived within a larger ownership structure, I guess, with other sister companies, and how do you think its performance can improve even further given its now association with us?
Look, it's a family-owned business since 1980. It then got taken over by Calibre, and then a reverse management buyout. That was the last of the assets that the O'Connor family was holding. For us, I think what does SRG do? It potentially opens up a bigger footprint, perhaps a bigger balance sheet. And I think as a combined offering, it really puts us up as an absolute key player in the space. And look, I think I'm at pains to point out this is a very, very well-run business. It's not trying me to walk in and help them. They know what they're doing. They're running a really good business. They've done an amazing transformation. And I think we can add some things in terms of perhaps unlocking further opportunities in the broader group, but vice versa, probably opening some doors that weren't open to this point in time.
Yeah. All right. Perfect. Just some commentary around Diona's past performance over the last few years.
Yeah, look, it's probably business not that dissimilar to ourselves, more project-based business historically. And in the last sort of few years, it's really in some ways shrunk back to sort of change the commercial model to start growing. And been really good growth in the 23 to 24 cycle. And, there's significant further opportunity to go. But, what I see with the sort of revenue visibility and the kind of term that they have, they've got an amazing foundation on which to build.
Okay, one around, I guess, our specialist drill and blast business, which was a mining services division in the past, and obviously is now amalgamated into the maintenance and industrial services section. So how was the performance last year compared to this year?
Really strong performance, and I think it probably, it is not a mining services business. It's specialist drill and blast and geotech, specialist drill and blast in resources, water and civil, and geotechnical maintenance in civil and resources. Terrific performing business, well led by Nathan Steiner and the team. A lot of good software with that particular business. They plays primarily in the gold space with great clients, but in terms of the overall profile of the group, and it is an industrial service. It sits in the maintenance industrial services segment, and it's probably been pegged wrongly.
Yep, perfect. What was the process around acquiring Diona? Was it a competitive process, and why they're selling now?
Yeah, look, I'm not going to go into too much detail on the process, but these were exclusive discussions for bringing this opportunity to us and executing the opportunity. And look, I think, as I called out earlier, this is the last of 3 assets that were held, Calibre, Aegis and Diona, and this was the last of those assets. And ultimately, that's it's been under a exclusive arrangement.
Yeah. What's the share price for the $60 million equity raise?
You probably take on that one.
83 cents. That one. So it's simple. Talked a bit about our SRG commercial framework. Can you provide some color around Diona's commercial framework and how do we manage the risks, particularly within those sort of contracts at a fixed price?
Well, I might save my voice for a second. Roger, do you want to touch on?
Yeah, so I think it's important to note that almost all of Diona's work is actually secured under long-term type agreements, and even the fixed price elements there are actually secured within that framework. So you actually get a chance to work through with the clients in a very collaborative manner to work through the profile of works, whether it be under whichever commercial framework it is. And I think to David's point, I think a great example of why that is the case is that the embedment within the client's offices, where the Diona personnel are sitting with the clients to actually construct the program, to actually design the solution, to actually come up with the program of works over the coming period, whether it be the next 6 months, 1 year, 2 years, 3 years, is really important to note. And I think that's again amazing testament to the transformation and the journey that Diona has undertaken over the last few years. So very much a very controlled and disciplined environment, and I guess very pleased to say that the disciplines that you expect to see in a business from a reporting and from a controls perspective, we certainly saw as evident within the Diona team. Who are some of Diona's biggest competitors?
Well, I think some of the key players, Ventia, Downer, UGL are probably some of the key players that they play against.
Yeah. Under SRG's ownership and expanded balance sheet footprint, what type of contracts can Diona compete for that it previously couldn't?
Oh, well, I think it just probably opens up more opportunities with the balance sheet that we have on the scale of the overall group, which to me is going to give further opportunity for Diona. I'd probably use the Water Corp as a great example in the West, which we've got very, very close relationships with, and it will open up opportunity there. And we've probably got more balance sheet flexibility as a public company to really grow and fund the growth of that business than under perhaps private ownership.
All right, terrific. Will the recording of this presentation be available later on? Yes, the answer to that's yes. Have you been approached as a takeover?
Well, not myself personally, no, but no, we've not been approached for a takeover.
Yeah. Okay. Well, that's kind of it. Sorry, I'm just reading through the list one by one. I think we covered everything off on that basis. So thanks, David, and thanks everyone for the call.
I want to really once again thank everyone. It's a really exciting day, and I'm really exciting about what we've got in front of us. So thank you for calling in.